Hey, and welcome to Tax Talk with the Tax Queen. My name is Heather Ryan. I am also known as the Tax Queen. I am an enrolled agent, and that means I'm licensed to practice taxes in all 50 states. Thanks for joining me today. Today I'm going to talk about how to pay yourself as a business owner. So if you're a business owner and looking to understand how to transfer money and get some pay, right? Nobody should work for free. Then you're in the right place. Before I go any further, I want to stress that you should have a separate bank account. So hopefully you already do. If you do not, please go and open one as soon as you can. As far as banks that I recommend, if you want to use an online bank, I really like the bank Novo. Otherwise, you can work with a bank that you already have a relationship with or you already have accounts with. Even a credit union sometimes gets good reviews and low fees. So those are just some options, but I really do urge you to have a separate business bank account from your personal, and that includes having a separate credit card that's used only for business expenses. So you have a personal expense and you have business expense, and you have two different credit cards. And this can be even for that simple sole proprietor. You want to keep things separate. It really makes life easier for you if you have things separate. There's no question of, is that a personal expense, a business expense? It's all business or it's all personal. So it makes it really easy. So I really urge you, please go out and have a separate bank account if you do not already have one. Otherwise, as far as paying yourself, it really depends on your entity structure. And again, we'll just go over a quick review. Entity structure is stuff like a sole proprietor or an S Corp or partnership. So remember, a single member LLC, same as a sole proprietor. If you haven't watched my video about that, feel free to. A multi-member LLC by default is a partnership, and it is kind of treated similar to a sole proprietor as far as paying yourself. So with that said, a sole proprietor and a partnership, to pay yourself, it is simply moving money from that business account to a personal account. So if you're a partnership, maybe you would pay all of the partners or the members. And if you're sole proprietor, obviously you're only paying yourself. But it's literally just, hey, this month is $2,000. Okay, take the $2,000, transfer it over to personal, and now you've paid yourself. Really easy. If you're curious about how to mark that into a QuickBooks or other bookkeeping software, if you're using it, that is an owner draw or owner distribution. Either term is kind of interchangeable, and that's fine. You would classify it that. If you're not using accounting software and hopefully you're still tracking your finances somehow with a spreadsheet or something, I don't even care if it's a handwritten notebook. Just make sure you're recording that in there as well. So if you have an Excel spreadsheet, just write down the date, how much you took, how much was transferred between business, personal, right? So that's pretty simple. There's no payroll needed to be run for the owners of a sole proprietor and a partnership. If you have employees, that's fine to pay them, but we're talking about paying yourself as a business owner. So no payroll, no W-2, really simple, I think. Anyways, moving money, one account to the other. I also wanted to talk about, because some people think that they can leave money in their account, right? And then they won't be taxed on it. So that is false or incorrect information. When you're a sole proprietor or partnership, heck, even as an S Corp, all money that the business has earned, so the net profit, let's just review what a net profit is. That's revenue or income minus your expenses is your net profit or your net income. So that's what you're taxed on. Whether it's in the bank account or not doesn't make a difference. The IRS does not look at that. The states don't care. If you want to leave some in there because you're going to have expenses that are coming up that you want to have a little extra leeway, that's fine, but you're going to be taxed on your full net profit. So it doesn't make a difference to leave any money in there. Okay, so we talked about having separate bank accounts. We talked about literally just moving money from business to personal. We call it an owner draw. What about if you're an S Corp? So an S Corp has separate obligations. Because you're treated as a corporation, you do need to pay yourself a salary as the owner. So remember, we're talking about paying yourself as the business owner. So as the business owner, you get yourself a regular salary or reasonable compensation. And this is based on geography. It's based on your skill set, your skill level, if you have a degree, if you have certifications, how many hours you work on the business. So those are all factored in. You also would consider, your revenue, your net profit, income from the business, right? Your salary can't exceed the income from the business. So those are all factors. Your salary can grow as the business grows and the income goes up. That's fine. It can also stay the same if you think that that's fair and reasonable compensation as your business grows, that your salary stays the same. It's possible. Every situation's different. But that S Corp owner does have to pay themselves a regular salary. So a regular paycheck should go from the business to your personal account, but also have, right, those taxes withheld and submitted to the right government authority. And that's part of running payroll. So you will have to run payroll if you're an S Corp owner. So I'm going to stress that anyone which is greater than 2% owner of an S Corp must run payroll for themselves as a W-2 paycheck, salary, whatever term you want to call it, reasonable compensation as the IRS calls it. This is, the biggest mistake I see. People become an S Corp and they don't run a salary. And if you do not pay yourself a salary, but still transfer money from the business account to your personal, the IRS has the right to say that that's salary. And now you're doing it wrong, and you're going to have interest and penalties for not filing the correct forms, on timely filing too. So just be really aware of that. As an S Corp owner, you owe yourself a salary, a W-2 salary. That can be weekly, monthly, bi-weekly, even quarterly is fine. But you do need to be paying yourself a salary. Okay, so we covered that as an S Corp, right? You get a W-2 salary. I think I stressed that enough. What about let's go backwards a little bit, and let's say you're still a sole proprietor. Even as S Corp owners, I think it's nice to kind of think through some of the things that I'm going to talk about right now. So I like to say that you have buckets, right? So you may have a tax savings bucket, and these can be separate accounts if you want. They do not have to, but maybe even just in your head knowing, okay, I have extra $5,000 in there, and I know that that's set aside for taxes. That's not for a business expense, and that's okay. Different people find different ways work for them, but having different buckets, even on a spreadsheet or something, it's great. So you would have your salary, or we'll call it salary in air quotes, because even as a sole proprietor, you should be making money, so you get a salary, right? You should have a savings, right? So if you have a down month, if you needed new equipment, or some other big expense that came up, you wanted to hire someone and you just, you need a little bit of leeway, right? Fine. So you have a salary, you have a savings, you have a taxes, and you have retirement. So once your business is making money, all four of those things should be satisfied. How much do you put in each? It really depends. So it depends on what's your living expenses. How much do you really need to live? So as a sole proprietor, maybe your business has extra cash, as you look at cash flow, it has extra income or extra amounts that it's earning of $5,000 a month. You only need $3,000 a month to cover your personal expenses. Okay, maybe you only need $2,500. That's awesome. Okay, then let's look at the rest of that and how we should set that aside. So we all know we pay self-employment taxes when we have a sole proprietor or even a partnership. That's 15.3% of our net profit. So right away, we can make sure that that's in our tax account to pay our taxes. You also will have income tax. Okay, that can be in the 20s, 15, 20% would be high, I think. Because if we're adding it to the other 15%, now we're looking at about 30% total for taxes. So I usually say somewhere between 30 and 35%, if you have a state income tax to worry about, is what you want to put into your tax savings account. So you can move that money every single time you get paid by clients or customers, or you can move it weekly, or you can move it monthly. It's really up to you. It's up to how you work, how often you want to do, moving money around, how often you want to work on your finances. I think monthly is kind of the basic. Everyone should be doing it monthly. If you want to do it more often, that's up to you, but I wouldn't do it less frequently. And the reason really, as you're starting to look at this, is how's your business doing? Are you spending too much money on something else? Did you have an awesome, revenue month and have a little more than you thought? Or are you working like crazy but still not making money and seeing that profit at the end, right? So those are things to really think about, and then that kind of dictates of how much you can pay yourself as that business owner and how much you can put into each of these buckets. So if your business had $5,000 one month, okay, net profit, and you pay yourself $2,500, you have $2,500 left to work with. So now we have to put some of that into our tax account, right? Because we want to have tax savings to pay our tax bill. And hopefully you can also contribute to your retirement. And there's all kinds of retirement options. I'm not going to get into that in this video. There will be a separate video on self-employed retirement options, but just keep that in the back of your head that you should be putting every time, like I said, either every time you get paid, once a month, whatever it is, transferring it and knowing that that's set aside for retirement. And so you don't have to have separate accounts. Some people like it because they don't spend the money if it's not in that checking account, if they move it to the savings account. Some people just prefer once a month, okay, I move X dollars or this percentage to retirement, to savings, to taxes, and then to pay myself. So it's really what works for you is how you should do it. There's no right or wrong, other than you should have buckets and you should understand, how much money is my business making? How much do I need to live off of? What's my budget? Monthly expenses. And hopefully your business can cover those and have extra. So I hope that this helped you just understand basics of paying yourself as a business owner, sole proprietor, partnership, S Corp. Again, I'm going to say it one more time. Make sure you have a separate business bank account. Otherwise, until next time.